I think if we threw out the last month and we just look at where we are today, we look at where we are with valuations, we look at where we are with the markets, that the markets are probably appropriately priced. They were probably a little bit too expensive a few months ago, and now you see rising risks with rising U.S. dollar, rising interest rates. This trade war has gone on longer than people expected. And that's really starting to make people rethink, where should appropriate valuations be? I think the pullback has been appropriate, but we're probably at a level playing field now.
So it hasn't made it, then we were overvalued before.
Yeah,
because
absolutely.
we've come down while earnings have continued to go up. So things are cheaper than they were on a relative basis at least 6 months ago. So in that respect, it's a positive. We've built a little bit of a base, you would say?
Anytime you see a rally like we have over the last 9 years, you need these kind of pressure cooker moments to let off a little bit of steam and to let the markets kind of recalibrate where they should be.
So there's not like an air pocket underneath it that there may have been before.
No, we see this as more of a recalibration of the markets to reset kind of an appropriate fair value.
Stephen, you have a lot of, since you are thematic, a lot of your comments today have to do with Brexit, and it is front and center with what's happening. Any impact on the global markets that we should be ready for based on what happens?
Well, clearly there's going to be an impact on global markets. I don't know that we're going to see that in the near term. I mean, this is step one in a multi-step process, and based on the lack of reaction that we saw in markets over the, post the news of a deal in construct, I think that tells you that investors are still skeptical and want to see this actually get through the cabinet, get through Parliament. If that happens, I think that's clearly a positive, not because it necessarily changes the fundamental course for the UK and Europe, but it removes a big uncertainty. And I think investors have been very skittish, particularly around Europe and the UK. Removing that prospect of a hard Brexit, if we get there, will be a clear positive.
Okay, oil's been on our lips for since it started, and actually it was on before then as it was going up. So it's weird, on our lips going up and down. Either of you have a different than consensus view on this? Is it oversupply, Jay?
In some sense, oil markets are incredibly simple because supply and demand is what drives them all the time. What makes them complicated?
But that makes it complicated because I want to know whether it's supply or demand. Which side of it is it both?
This is a supply issue right now. You do see demand expectations are coming down in the oil markets, but the real reason is that OPEC started increasing output. The U.S. output growth has been extraordinary over the last year, and you have an oversupplied market again, just like we had back in 2000.
Good or bad for the stock market?
It's good for consumers. I think this could actually be another tailwind heading into the holiday season, but obviously it's going to be bad for energy stocks.
We actually think this is a tactical opportunity to be looking at opportunities within energy stocks. I think that the concerns around the demand piece of it, as Jay alluded to, I think are overdone. Demand in the oil markets tends to be pretty sticky. I think this supply shock that we're seeing in the near term is going to rebalance itself out. At the same time, if you listen to what energy producers were saying during Q3 earnings, they seem to have found some sort of discipline that investors have been looking for basically forever. And if they can have a more shareholder-friendly mindset, make it more about returns rather than just production goals, we think this is an opportunity for tactical investors to be buying E&P stocks.